Hello, Mavericks. This is the Trading Room. This is Rob Reinhold. I'm joined by Mr. Darren Fisher. And here we are going into the third week of April. This is monthly options expiration week. So let's make sure that we're all on our toes. Let's cover last week. Last week we had a ton of news and a ton of things that are going to affect this market. Last week we did have an up week, but it was an ugly week. And we'll take a look at here in the charts. But when you have an up week, but 3 of the 5 candles were red, so we had 3 down days and 2 up days, and we still ended up for the week. So it was a nasty, ugly, choppy week with lots of pullbacks from runs, with lots of little failed rallies that pulled back. But in the end, we did trade up for the week. That being said, we called for the markets to reach about the 4170, 4180 area, and that's where they hit. And when they hit their head on that, they came down pretty hard. Now, the biggest news that happened last week was inflation. And if we take a look at the inflation numbers here, you can see that on Wednesday, we got core CPI and CPI, and you can see that it missed expectations. They're supposed to come in at 0.2. It came in at 0.1 month over month. Year over year, 5.1 was a forecast. It's now 5. A year ago, it was 6%. So we went from 6% to 5% inflation. Initially, the market said, hey, that's a really good report. But then people started to think about it and they said, hey, 5% a year is still bad. And the Fed says it wants to get it down to 2 to 3%. That is still a far way away. So we actually sold off after the jump on Wednesday. And we actually didn't look like we were going to go up much more off of that news. And then on Thursday, we got the PPI number. Look at this number. This is a cratering of inflation and inflation expectations. They were looking for a 0% month over month. It was negative 0.5. They were looking for a plus 0.2%, negative 0.1% on the core. At this point, this was the biggest rally day of all of last week. And the market rallied all day long off of this. And then on Friday, we got retail sales. And the retail sales were very weak. And the market actually said, oh, we're going to sell off on that. And one of the things that Darren and I wanted to discuss, and we actually were discussing this earlier, is that over the past, it's almost been like 10 months now, 9 or 10 months, we've been talking about good news is bad news and bad news is good news. And what we meant was that inflation was really high. So when good economic news came out, it was negative for the market, because that meant the Fed was going to raise more. When bad economic news came out, it was good for the market. That is no longer the case, because with these reports, the market has said, okay, inflation is definitely coming down. So we already know inflation is coming down. So when economic numbers come out, it's just bad news. And that's what we saw when the retail sales came out. The market just didn't love it. It says, oh, wait, we already know that the Fed's probably on hold now. Now we just have economic data that's getting worse. The market doesn't really know what to do with that. What do you think about that premise, Darren, that the bad news is no longer good news?
I think that's what we have to take a look at. We're going to see it here. The expectations for the regional manufacturing, they've been weak for the past, I want to say 3 or 4 months, and we're getting I'm getting some anecdotal stuff. I was talking to a mortgage broker in Southern California a couple of days ago. And that's anyone who lives in Southern California knows that's a jumbo market. Their investors are no longer underwriting jumbo loans. They're having to go and try to expand their business in some of the lower end markets just to be able to get some business from the conforming loan. And the market's going to have to price that down.
Let's spend a little bit of time here to talk about the term soft landing. Now, if you don't know what that term is, it's this mythical unicorn that the Fed puts the brakes on the economy, but does it to where it doesn't cause a recession and it just slows everything down to the perfect amount. There's a soft landing, and then we go back to economic growth. That's what they're trying to get to. And they've never really got that right. Who knows? Maybe they'll get it right this time, but that's where the market is right now. Is this going to be a soft landing? Is it going to be a hard landing? Or is the inflation problem still out of control? One thing I did want to point out, we got the first companies to announce first quarter earnings. We heard from the banks. So JP Morgan and Citigroup were positive. JP Morgan had a big jump. And then Bank of America and PNC Bank, a regional bank, much weaker than expected. So I think we're going to continue to see big banks shine and these mid-level banks really look pretty shaky. Let's take a look at the charts. Last week, we talked about it was an up market. So let's take a look at the numbers. Dow was the best performer, up over 1%. S&P up almost 1%. We've been talking about the Qs underperforming. They were the outperformers, and they pulled the rest of the market up. They already had their run. So we think the Qs likely continue to underperform. The Russell's starting to catch up. Oil had a nice run. Gold was up about 2% early in the week and then gave it all back on Friday. Let's really focus on these charts because we talked about this resistance level right up here at the 415 area on the spiders. We came up and touched that. Now look, we just barely touched it. We might still have to bump up against it. Look at these candles. We talked about these candles last week, how the gap downs were bought. Every gap down was bought. Take a look at this week. Gap up, sold off. Gap up, sold off. Gap down, bought. This has been a tricky market, especially if you've been looking at anything intraday. Ultimately, we just had a nice channel to the upside, but when you take a look at the individual components, it was super choppy. I personally think a lot of shorts just had to admit that they lost and they covered this week, and they were using any weakness to cover. I think that we have really run out of gas because what I didn't see this week were the second and third stages of rallies. Because usually you get these rallies, and then what happens is more money comes in. So much new money is coming into the market that there's all these second and third stage rallies. I did not see that this week. I saw rallies that fell apart. Rally fell apart. It's telling me that, yes, there's more buyers than sellers, but it's not substantial. I'm looking at this chart. I'm looking at where we've come from down here at 380. We've had a big run up here, almost 10%. What's the most likely thing to happen after a 10% rally? Probably a base. I'm really looking at a sideways market from here on out. Now, look, I do think the spiders could do a little bit better because we talked about how the Qs, they just blew past everything. The Qs, though, really aren't moving and haven't moved for about the last 2 weeks. Ultimately, I think we're going sideways. Darren, you pointed out the low levels of the VIX. What do you want to tell everyone about the VIX?
Yeah, I agree with the premise that we're either going to go sideways or possibly grind up. I don't see anything on the horizon that says we're going to shake the market down for a 5% pullback. I just don't see anything on the horizon. The one thing that does give me pause, though, to take a look at this, is we have not seen levels of the VIX this low since last year. Okay, the amount of apathy for hedging, just the total disregard to hedge anything, is usually when we get kicked in the fork. So that it could be for absolutely no reason at all. It could just be one of those ones. Some major firm has made a mistake. They need to get out of something and could cascade the markets. I don't think that's going to happen, but to have the volatility this low just tends to be the time when any single catalyst can make everything fall apart because nobody's hedged. That's the only thing that I'm looking at right now. But if I had to lay money on it, yeah, I'm going to say 6-4 we go up.
Yeah, I think you're right about that low VIX. I think any news that comes out could actually change everything up pretty quickly. But I'm with you. I think this market is going to grind higher. So ultimately, we said last week there is no reason at all for anyone to stay bearish technically. We had an up day, an up week. So here we are. We're up against major resistance. I think we're a little tired here. We spent a lot of energy to get up to this point. We are now getting into the point where bad news is no longer good news for the market. I think we have to start looking at possible sell-offs if we do get weak economic news, where in the past, those have been rally points. The first quarter earnings have begun, so we need to check our positions. Over the next 2 to 3 weeks, especially, there's going to be lots of earnings coming out, so make sure that you are watching for those earnings. And these manufacturing reports that Darren talked about earlier are very important this week. And they're really important because they're really the only thing on the calendar this week. So we have a very quiet week, which is another reason why I think this market is likely to pause. We just had a whole bunch of news with inflation, retail sales, jobs report. I think we're a little tired. And here we have a week that there's not a whole lot going on this week. So I'm really thinking we take a pause this week. We've got the Empire State Manufacturing Index on Monday, and we have the Philly Fed Manufacturing Index on Thursday. Those might move the market to 0.5% each of these days, but I think ultimately the market is actually pretty sideways here. This is where I am. I'm on a +2 on a monthly outlook, that this market is above the 20, above the 50. The slope isn't quite moving higher, so we're not at a +3, so we're moderately bullish. But for the week, I don't see anything in this week to push us higher. And in fact, when you take a look back at monthly options expiration, they've tended to be more down weeks than anything over the last year or two. So I'm looking at this week being a big pause, maybe a day or two where we move down 1.5%, 2% at one point, but I think the buyers come back into it there. I think we're flat by the end of the week. What's your call, Darren?
Yeah, I mean, I'm the same. I think we end up flat for the week. We're gonna see some days where it looks like, it's gonna be +1. We're gonna see other days it looks like it's gonna be -1. I think in the end we're gonna see some chop, but next Friday we're gonna be pretty close to where we are. So let's take a look at the sectors. We're gonna see here the sectors are all looking pretty decently. You take a look. We had 3 down sectors: utilities, real estate, and tech. Everything else looked pretty good. Financials, energy, and industrials were all above 2%. Everything else was just kind of going with the flow here. So taking a look at them individually here. I got utilities at a +1. Now, it's still the reason it's not a +2. We're above the 20, we're above the 50. It's because we did downtrend. Okay, you take a look at the spiders and the Qs, and it was just this grind, but it was still an upward grind. You take a look at utilities, it was a choppy, but it was kind of a downward grind. Wednesday, Thursday, Friday, we couldn't hold anything up. So this is utilities going a little bit counter trend to the market. So I can't say I'm bearish on utilities, but I'm less bullish than what the chart would allow me to be. Going on communication services. Got a +2 for comm services. It looks pretty good. We're butting our heads right up against a resistance that we put in right back there. So again, this is one of the ones where I think we're going to have to pause. I think we're going to grind. We're going to beat our head against against that resistance for a little bit, and either we're going to pull back to probably the 50, probably the 20, or it's going to take something to just grind above the market. I don't think we have anything explosive moving past that resistance. I think this one just looks like it's just tending to need to base a little bit before we do anything else. Looking at real estate, pinned between moving averages, that my rule is 0. You can see Wednesday, Thursday, Friday did not look good for real estate here. So a lot of stuff going on. I mean, 3 down candles. I mean, it gapped up and then came down on Wednesday. And Thursday tried to make a little bit of a rally in the afternoon, just didn't do it. Had a flat open on Friday, and then just started to sell off. And that's just all it did on Friday. So not a lot of appetite for real estate right now. Looking at industrials, there's another one's a 0. We're right between moving averages there. This is more of a positive 0 than real estate is, but technically, I mean, we're just right between those moving averages. Where do we want to go from here? Again, this is one of the ones I think wants to base, but this one I think bases and then heads to the upside a little more readily than a lot of other ones. Looking at healthcare, it's looking good. Healthcare, it's solid +2. I mean, it didn't participate on Friday, a lot of other things. So we might actually be at resistance right now. Need a little bit of a pullback here because we've come. You look at the past 2 weeks, past 3 weeks, we've really come very, very far. in a very, very short term. I mean, we were talking about 2 months ago, we were in -2 in healthcare. And in the past 3 weeks, we're back to a +2. So healthcare has been catching a bid. This is not one that I want to try to, I would not try to, think I'm the smartest guy in the room and short into this in any way. I think if we have hit resistance, we're gonna base here for a little bit, but then I think the next move is going to be to the upside here. Healthcare, it just had a rough first quarter, but I think it's going to shine second quarter. This is looking pretty good here. Going to financials, we're to zero financials. This is a little bit of a, we had a gap up, but I mean, this looks like a doji to me almost, for the entire financial sector right there. I mean, it did look good. It was up nearly 1%, but couldn't go anywhere from there. So again, this one I think is going to base. I think this might actually pull back into the previous range that we had. It would still be a zero for me right there, but I wouldn't be surprised if financials ended up the entire sector ended up down 1.5% this next week just to get back into that range. Then let it base a little bit and see which way it wants to go. Consumer is another one. I mean, we're technically above, but you see, this has been so choppy with limited price action here. It's in a slow grind up right there, and it's just breaking through. I mean, we're in, I don't want to call it a symmetrical triangle. It's probably a triangle with a little bias to the upside right there. But where do we go? I mean, this thing, the moving averages are so close together that, one day makes it a +2, the other day makes it a +1 or a -1. This is a hard call right here. I would actually want to see it break extreme to the upside or extreme to the downside before I'm going to make a huge call on the consumer right now. And tech, still the +2 for tech. Just nice orderly pullback to the 20-period moving average right there. Really in a base more than anything else. I would say that the average caught up to the price action more so than the price action moved down to the average. So basing right here still looks like a very good sector. I think this one bases a little bit more, gets a little more energy, but I think the next move is to the upside in tech. Looking at materials, I actually kind of like the materials right now. I'm at a +1. We're above that 50-period moving average. Friday's candle didn't look the best, but this looks to be pretty good. There's a lot of stuff individually in materials that are really starting to catch bids, and I think this is one that we've been mercenary on materials. Last year we really liked it, and we turned on them like an assassin. The past couple of months, but now I think it's looking pretty good. I think there's some names in materials that are they have their fundamentals down and they're looking pretty good. So I'm mildly bullish on materials here. And the same thing in energy right now. I mean, here's the thing. We've gone from 76 up to 87 in about 3 weeks. Okay, that's a lot of energy right there. And now I think we've still got a base. We're in this ascending triangle base right here. I think the next move is to the upside, but you can see on Friday we kind of had that again. That doji right there doesn't want to pull back. I mean, this thing could pull back all the way down to the 50-period moving average, and I'd still be mildly bullish on it. But where do we want to go? I mean, this is that would still put it in in a what would technically be a high base, and I would still be pretty bullish on it. So I think this is going to hang out here for at least a couple of days. If we don't get any resolution on to the upside next week, then I think we have to say this is going to be a base, and this will turn into still stay at a +1, just with a sideways bias to it. So looking at everything, nothing on the negative side here. Everything is neutral to positive. Consumer, financials, industrials, and real estate all to 0. Energy, materials, and utilities +1. The ones that are looking the best right now: tech, healthcare, and communication services. Plan your portfolio accordingly. Looking to this layout right now. So let's take a look at some potential trades. So last week we were short BXMT, and this one came in for us, decently here. It was down 1.5%. So I think we've got another week, or I think this one has another week on the trade, and so we're looking pretty good on that one. We will see where it goes. I'd love to see it break below 17. and we'll see where it goes for the next week. But this trade's looking fine for us. We're looking at this week is Starwood Properties. Nice little bear rally in Starwood. Rolled over on Wednesday, could not get anything going on. So how do we want to play this? Go out to May and get a long put. We don't do diagonal put spreads very often, but I think you go out to that May, you buy that 18 put, and then just give it a week. Go buy the 17, sell the 17 put against it right there. And the only thing we're saying is, hey, just hang out somewhere, around that 17 area. Don't have to make a hard break lower. Don't have to make we don't expect it. I mean, this thing can get down to, 1650. Look at the scaling on this. This does not move very often. Those are 50-cent scales. So this is one, if it's got dollar strikes playing well, just don't expect, massive moves on a company price like this. But this looks great to the downside to me. Communication services. Last week we were long Pinterest, and this one performed decently for us. It was up 1.1%. So this looked pretty good. I think we played this diagonal, so we probably came out pretty close to a max gain for the week. This has a little more time in it, and so I'd say let it run. I think you might possibly see resistance at 29. That'd be a decent place to ring the register for me. If it goes through it, then I think we're going to be looking pretty good. Looking at Google right now, it's going to be a bull pullback now. Earnings are on 4/25. All right. Had a bull pullback. We confirmed on Thursday that pullback was over. We're back up at resistance right there. So I think we want to look at that May 5th, 105, and then next Friday's 110 diagonal call spread right there. Now, this is going to be one. You're just holding it until, for 1 week right there. If you want to hold it through earnings, I think you have to play it a little bit differently. This is just going to be a 1 week trade as far as I'm concerned. I really don't have any interest in holding Google through earnings. If you do, what you want to do is, figure out where the close is next Friday and roll into something else, roll into a vertical if you need to. This is one of the ones, there's nothing wrong with holding through earnings, but you have to size yourself correctly and do things where you're not going to take an entire bath if it does not go your way. And healthcare. Last week we were long ENTB. This did nicely for it. It wasn't looking great in the beginning of the week, but hey, had the bear rally confirmed on Thursday. This was up total about 3.8% for the week. So if you got into this on Wednesday or Thursday, looking pretty good. Keep this one until expiration. I think this trade's looking fine for everyone. Right now we're looking at Cardinal Health, CAH. Nice high base right here. Broke above resistance on Thursday. You might want to see one more candle to confirm. That's fine. How do you want to play this? I think that diagonal spread is the way to go. This has been looking pretty good. So go out to May, long that 77.50. Give yourself 1 week. Sell that 82.50 right there. If this thing bolts up, you can go. If you're not that bullish right there, you could even sell the 80. If you think we're going to get a little bit of a pullback, there's definitely some intrinsic value in that 80 call. You could sell against it. I think you'd be fine either way. Another way to possibly play this, just do a May April 80 diagonal. 80 horizontal is another way to play this as well.
All right, moving into industrials. Darren, you gave this a 0. I'm giving it a 0 as well. I think you gave it a 0 plus, and I think that's about right. Last week we had it sideways as well, so we played Canadian Pacific sideways, and Canadian Pacific decided to have a pretty strong week for a railroad. It was up about 2.5% for the week. Our midpoint on this butterfly is 75, so we need this to come back down. It's right at the top end of our range. If it keeps going and moves, it's going to be a max loss. So if it comes down, we're going to have a nice little profit here next week. Moving on to this week, we are looking at ADP, Automatic Data Processing. As you can see, this stock has vastly underperformed the rest of the sector, the rest of the market. It's underperformed everything. And whenever these things rally, you short them. You just short them. Every time there's been any sort of rally, you take a short position in it. We did find some support down here at about 212, and we got a little rally here. Look, there might be a little bit more left in this rally. We might get up to 220, but the next leg is most likely lower, technically speaking. So as long as you give yourself enough time and you put yourself in the right place, I think this trade is actually fairly simple here. Now I'm going to go with a pure theta trade here, where it is completely theta, where I'm going to sell the 215 and buy the 220. What this means is that this stock doesn't have to go down. It just has to not go up. As long as it stays in this area, I'm going to have a profit. If it drops and falls, great. I've got max gain. If it stays where it is, I've got a nice profit. And then at 220 and above, I don't care because I've hedged out my risk on this. So looking just for a pure theta play here with a slight bearishness. I think this is the best way to play things right now. If you believe like we do that we're not really going anywhere, then when you go to your individual trades, remember, about 50% of what a stock does depends on what the market does. Another 30% depends on what the sector does. The stock is the smallest part of this whole component. So if you believe that this market is going sideways and industrials are a zero, you better make any trade in industrials to be very, very neutral. You can't ask industrials to be running, 5, 10, 20% when the market's sideways and the sector's sideways. It's just silly. Let's move on to another sector that is a zero. So last week we played PayPal as a sideways trade, and it did exactly what we wanted it to do. It went sideways. So as long as it just stays in this range, we are very, very happy. Got 1 week left on the trade. It looks absolutely perfect here. So again, if your call is that the market is sideways, financials are sideways or maybe a little bit lower like Darren said, then we want to play things that basically fit that premise. So I'm going to be looking at this diagonal put spread. As you can see here, this stock is low basing. It is just simply hanging down here at 120. I don't want to be too bearish here, so I'm just going to open up a trade. Sorry, that's a terrible risk graph, but here we are. Basically, as long as it just hangs out in this area, it's going to be profitable. If it takes up, I've got my risk parameters, I've got everything position sized. As long as it just stays down in this area, it's going to be a nice profit. Again, this is just a 1 week trade. We're just looking to go out to the April 21st, and then we can reevaluate what we want to do with these May 19th. We can sell the whole position for a gain. We can roll to another diagonal next week, or we can just hold the long puts in case the market does break down.
So in consumer, last week we were a short Hormel, and as much as I like the canned food that Hormel makes, this is clearly not doing well. It had a bear rally, and it just confirmed all the way down. Friday was a great day down. So total, it was down 2.6%. So this trade's looking really nice for us, and I'm happy to keep this one till expiration. Right now we're looking at CPNG. That's Coupang Incorporated. And this had a little bit of a bull pullback. Pulled back to that 50-period moving average, bounced off of it. I'd say the confirmation came on Friday. I wouldn't call Thursday, even though it was a green candle, I wouldn't call that confirmation. So I'd say it confirmed on Friday. So what's the best way to play this? Go out to May 5th. Give yourself about 3 weeks. It's 15, 1750, a bull call spread right there. And you're right in the middle. I mean, this is probably going to be something along the lines of, probably a 1-to-1 reward risk is maybe a little bit pegged to the upside right there. This thing can keep going all the way up to 1750 and you'd be happy. And you've got those 15s, they're going to help you out right there. So this is looking pretty good. You might hit a little bit of resistance at 1625, but the market just grinds up slowly. You're giving yourself 3 weeks for this thing to move $1.50. I think it's entirely reasonable. In technology, last week we were short SPWR, and this one decided not to play along with us. And it was up 10%, and that's fine. We just, you size it for max loss, and we just let it go. Let's name the trading. You're not going to win them all. So just write this one off, and you know what? 3 weeks from now, we won't even remember we had this trade on. Now we're looking at another kind of a bearish trade right now in Bumble, BMBL. This thing broke down and it broke down hard. So play a diagonal put spread. Go out to May, and go long. Let's see, go long those 19s, go long those 20s on the puts, and short the 17s. If it's got dollar strikes against it, go out there and if you got 17, if 1650 is an option, I think that's a very good thing as well. I mean, this thing just wants to keep going lower. You're giving it a week to clean theta and go down a little bit, and then you can decide if you want to keep those long puts. With the VIX so low right now, puts are very cheap comparatively. Any option's cheap with the VIX being so low. So this is one of those times, if you're looking to play something to the downside, this is one of those historical times where it makes sense to go long puts on a lot of things. Usually when you're in some sort of a downtrend, the volatility is so high that those puts are too expensive to actually be profitable in a lot of different ways. This is one of those times where long puts are definitely worthwhile.
Moving into materials, Darren, you gave that a +1. Okay, so last week we had LYB as a trade, and overall the trade worked really nicely, up 2.65%. You can see this is just a great candle, fantastic candle. Again, gap down, people came in and bought it, and then followed it up on a down day on Friday. There's no reason this thing doesn't go higher, so this one's looking really nice here. This week, we're looking to be more neutral to a little bit bearish here. So here we have U.S. Steel, and we can see that ultimately we are in a low base. So we're not really trending here. We came down, we hit this 24, we ran up to 26, came back to 24, up to 26. We are now in this low base. One of my favorite things to do in low bases is play rallies. Now, a low base breakdown is a pretty simple trade. It's pretty easy to recognize. When it breaks down below 24, you want to get more short. Here we have rallies up to the top of the base. I really like to take positions here. So I'm looking at opening up at 24, 26, bear call spread, and I'm looking to give it 2 weeks. So I'm basically saying I think 2 weeks we're just back down into that range. And if so, we're going to have a very nice profit on this one. Again, remember, we're not asking anything to go too far. We're just playing in ranges. We're playing lots of sideways stuff, lots of diagonals. We want our trades to match the underlying market conditions. If the underlying market conditions change, we need to change our trades. But until they do, we want to be moderately, slightly bullish, leaning, and anything bearish, we want to be slightly bearish. Let's move on to energy. We had FANG last week. FANG we said was going to go sideways. Well, it decided to go up 4%. But look, it's still within the range of possibilities in our butterfly. We do need it to come down just a bit. If it does, it'll be a nice profitable trade. If it just takes off and runs, as Darren said, this is where you just cut it and you won't remember it in 3 weeks. It's totally meaningless. This week, we're going to stay with that sideways trend. Now, energy is a +1. So I'm looking to play this a little bit bullish. This is where we use targeted butterflies quite a bit. A butterfly is a mostly sideways trade if you sell it right at the money. So a truly sideways butterfly, the middle strike would be 116 where the stock is currently. However, with a butterfly, you can be targeted. Say, hey, you know what? I actually think 118 is where it's most likely going to be in 2 weeks. Well, great. That's exactly what we'll do. We'll open up a 114, 118, 122 bullish butterfly. And these butterflies are great because they're very slow moving at first. What this means that if we get a one-day news event that says, oh, oil plummeted, this is hardly going to hurt us early on in the trade. Now, later on in the trade, it will definitely hurt us. But if this happens on Monday, we'll be down a tiny bit. It's not going to be that big of a deal. They move very slowly at first, and then as you get closer to expiration, they start to move quite quickly. What this allows you to do is sit through a lot of volatility. If this thing takes off and runs up above 122, we have time to just let it drift back down. So targeted butterfly here, 118 at the middle strike. That is on Exxon. Again, slightly bullish. We want to match the underlying market, the underlying sector when we're making these trades. That are the trades for the week. If you guys want to share more trades with other Maverick traders, go to the website, log into the members area, go into our forum. I love to see our traders have discussions there. Let's wrap this up. These markets are against major resistance, but I'm with you, Darren. I don't see any reason why this market is going to come down in the near term, unless there's something that we just don't know about or is a black swan event. This market is probably going to hold in or go a little higher. So I think you want to match your trades to match that outlook in the market.
I think if the Ukraine invaded Belarus, then that would be a major thing right there. But I would check the.
Is anyone talking about that happening?
Odds on that one? No, not at all. But it's one of those black swan events that nobody sees coming. That's the only thing that I could see that could derail this is an unknown.
What about if Texas invaded Oklahoma?
Wow.
That's a black swan right there. That's the true black swan. That is a
black swan right there. I mean, what does Texas gain from invading Oklahoma? What does Oklahoma gain from Texas invading Oklahoma?
Okay, just in case that does happen, I win $25 million for sure, or something. That's the greatest call I've ever. If that, of course, it's never going to happen. But anyway,
no.
That's a black swan right there. So I do think we continue to see the broadening of the rally, where the things that were really hot, the things like the Nvidias and the Metas, I think they've had their runs. I think we're going to start to see Dow-like stocks, S&P stocks, even the Russell stocks that have been lousy lately. I think they're going to start to catch up. So anything that has underperformed, I think actually is a little bit more bullish than the things that have outperformed. Ultimately, sideways up is the most likely place to be here. As always, focus on your portfolio allocation. Make sure that everything is sized correctly. Position sizing is where you win this game. It's not on the charts. It's in position sizing and position management. We hope everyone has a great weekend. Be safe, everybody. Goodbye.
Good trading, everyone.